What's up, guys? Welcome back to Daily Crypto Analysis. So, tonight was a bad night, obviously, right? And a lot of people at this time are asking, how bad is this going to get and where might we go to? So, tonight we're going to take a broad look at the market and we're going to look at Bitcoin, Ethereum, and a few of the top altcoins and see, just where we're at and where we might go to. So, let's jump in. So we're going to start with this, and this is going to be very important, guys. And this is the S&P 500 index. And what we're looking at here is the 60-day moving average. And so what you can see is every single month for the last 5 months, on either the 19th or the 20th, we've come down to test this 60-day moving average. You can see here dating all the way back to May. We've been testing the 60-day moving average. Right now, we've actually had a close below it, but it's just one close. And, we've had some closes in the past below it for a couple days at most, but we've always got right back above and back on the move. So that begs the question, is this going to be, the end of the bull market for the broader market in general? And if that is the case, typically speaking, that's not a good sign for crypto. So this is something we're going to be watching closely. And, what we want to see is this get back above and keep moving forward. So here's another key indicator that we need to be watching. And I've talked about this before, and I think this is something a lot of people are ignoring because they're, underestimating the magnitude to which this one indicator influences the crypto market. I mean, I think there's a strong case to be made. This is the most important indicator, which, has broader implications for the crypto market. So, we talked about it before, and, I think it's a little bit it's something a lot of people don't know about. No one talks about it. You don't see anyone ever talking about this. But guys, look, when this is the US dollar currency index, when this trend is above its 20-week moving average and moving up or even above it and moving sideways, it spells bad news for Bitcoin. Even the end of our market cycle, guys, look. So the market cycle started positive as the US currency index started trending downwards. That's coincides exactly with when our market cycle in crypto started going upwards. So do not sleep on this indicator, guys. Look here back in May. This indicates right here, this is when the US dollar currency index reversed course. And look at what the crypto market did at that time. So this is the total crypto market cap. It reversed course and came back above. And that's when the crypto market went down to its lowest depths. Now it's moving sideways. It started to come back down towards its 20-week, and that's when we were able to go up. Right here is when this trend started moving down. Right when it started moving down, we were able to start moving back up. And you can see, if you look here, guys, this is January of 2018. You can see that's right when the US dollar currency index started moving up, is when the crypto market started crashing. They move side by side together. Here's when our, like I said, this is when our market started booming, is when this came down and started crashing. So pay attention to this, guys. I think we're at almost a critical point here. Here's where we're at. We're above our 20-week moving average, but we've been struggling, or, the US dollar currency index has been struggling to get above this point right here. It's been meeting resistance right in this level. And this is going to be the key right here, guys. If we see this start to shoot up, especially if we see it go above this zone right here, it's going to be trouble. If it moves above 94.6 and, breaks above it, I think, the crypto market and maybe the broader markets in general are really going to be hurting. So, it's happening right now. Forget the golden cross, forget all of that. This is the game right here, guys. This is what, you know, this is what people in the financial industry are paying attention to. You know, if this takes off, crypto, the stock market, it's going to be trouble. So we need to watch this. So now we're going to go to Bitcoin. So you can see back on around, the 14th, we broke above this descending triangle that we had been forming ever since the September 7th correction. And we were sort of trading in this demand zone right here. And we came up and started to approach this zone here, but we lost the momentum and we crashed back down to where we were before we broke out of the descending triangle. And this happens a lot with these descending triangles. You break out one way and then within a few days you come back and correct. So here we are, we're back at this demand zone here, and we're going to need to hold this level here. But like we said, and we've been saying, the key to the bull market is going to be this line right here. This is our 20-week moving average. If we come down here, maybe we'll get a bounce, but ultimately we need to test the 20-week moving average. This moving average is what determines the bull market for crypto, for Bitcoin, and for crypto in general. We can quickly go back and take a look, guys. You can see, like we've been saying, this zone right here, this is the test you need to have a successful bull market. Every huge, massive run for Bitcoin tests the 20-week, and it needs to come down and test it for a few weeks. See, we hit it here, we couldn't hold it, we came above, then we started testing it. Test here, and then we took off. That's what you need. So that's what we need to see now. So, on a more micro view, we're looking at these smaller zones, with demand zones down at 42.5 up to around 44. But at the end of the day, what's going to matter is if we come down to the 20-week and test it, and then, and only then, are able to come up into these new all-time highs. Because at the end of the day, guys, we don't care about these zones. We don't care about the, the 49 to 50, the 44 down to 43. These are just, pit stops. At the end of the day, what we care about is this. We want to break this zone here, 64,000. And to do that, we're going to need to test the 20-week and hold it. If we go below and have, a week or two weekly candle closes below, it's going to indicate that we need more time. We need more time to, consolidate and before we can move forward. So that's kind of where we're at now. And, as we know, Bitcoin is the market driver. So it's all going to come down. Everything else we're going to talk about now is all incumbent upon Bitcoin holding above the 20-week. If we go below the 20-week, then, everything else is a moot point, essentially. So here we are at Ethereum. So again, and I think this is going to be a common theme. We broke out of this descending triangle on the 14th. We, came up, we came through this demand zone. And, we hit this area here, and we're not able to, we weren't able to get above this region right here, guys. We got rejected off here. And, you can see this is where the next level of resistance is going to be. There's a supply zone here. So we got rejected off of this supply zone, and we came back down, and we hit into this demand zone. And unfortunately, the events of yesterday and into early this morning, we weren't able to hold this region. So we've now come down here, and this is going to be a big place for us. So we're in this fairly strong area of demand right now. So this is a key area we're going to want to see ourselves hold. If we drop below this, we drop below that. Let's take a look here. So you see what this is showing us. This indicator basically is you can think of it as where large volumes of trades were made, where there's high volume levels. So this indicates this is a high volume level, right? This is a high volume level. Here's another high volume level. So what tends to happen is if you are not able to hold a certain region, which in our case is one of these high volume regions right here, then you tend to drop down into the other high volume regions. So you can see there's almost this vacuum here where there's not a lot of support, guys, down in here. So we might, if we're not able to hold this region, if we start to fall below here, we could easily see ourselves falling down to 28,000, 27,000. And then there's a big demand zone down at 26. Sorry, I'm saying 1,000. Maybe in a few years we'll be at 28,000, 27,000. What I meant to say is 2,800, 2,700. But there's a very large area of demand down here, down at the, around the 2,600 region, 26 to 2,700. So ultimately what we want to see is, we want to hold kind of where we're at now. If we start getting down into this region and fall below, then, I have a strong suspicion that we're going to end up sort of in this region here. Alternatively, and this is more positive news, if we're able to bounce off of this demand region that we're in now, there's not a lot holding us back. Once we can break through, once we break through this area here, right here, the 3,900 level, this is sort of the last area of major resistance. Once we break through that, guys, and it might not happen right away. It might take us a little bit more time, but once we break through that area, we're pretty much smooth sailing, because there's just not a lot of resistance in this region. You can see the volume here. So think of this, like I said, these are high volume areas. These are not. So there's not a whole lot once we get through, the roughly, 3,300 to up to about 3,600, which is, the area where we've seen ourselves just moving back and forth between. Once we get through that region, guys, we could see some of these higher valuations that we hear about, the $5,000, $10,000. It's not going to come overnight, but it's definitely on the horizon, be it, in the short term, if we're able to do it now, or, maybe 6 months to a year from now. But it's coming, guys. And Ethereum's, I think, in one of the best positions to do that. All right, so let's keep going. Let's take a look at Cardano. So Cardano's had a pretty big correction. We were up here at around the $3 range, but as we said again, guys, remember the Alonzo Purple update. We said this in a video just a few days ago. Typically, the short term, 30 days minus 12%, 60 days 3%, for these hard forks, these upgrades to the network, have not been kind to Cardano. In the short term, we've seen Cardano down, right after these updates, and that's exactly what we're seeing here. So it's not unexpected. So, like I say, you go to a lot of these channels and they say things without any data backing it up. And, you need to you know, just look and see if, you know, what they're saying has any validity to it, or if they're just saying, you know, everything that happens is good and it's going up in the short term, because that's not how it works, guys. So, you know, so what we showed empirically in the last or, you know, a few episodes ago, Alonzo Purple update likely is not going to be a short-term price boost based on all prior hard forks. They have not typically been price boosts, but they have been medium to long-term indicators of great things to come. So, you know, and that's what we're seeing here. We're seeing a short-term price correction, and that's because people speculate the price up in, you know, anticipation of the update. The update happens, and, you know, then people sell off because they've made nice profits, and that's what we're seeing here. So, you know, you can see we have pretty strong areas of, unfortunately, from, you know, $2.11 down to about 175 is a pretty weak area of support. But once we get down to, you know, around the 175 level, you know, even, you know, 180 level, I think the area of demand increases significantly. So we'll see. As far as Cardano goes, I would be, you know, if you're looking to take a position, you know, I would say, if you want to be, you know, if you're not trying to get the rock bottom dollar, you could start looking at around, you know, at around the 180 level. It could, you know, it could very easily go lower than that. You know, we have a very strong area of support down here at around the 120 level, but, you know, I think it's questionable whether it's going to go back to those prices or not. I think it's more likely that, you know, if things get really bad, we head down to maybe the 160 level, but it's not inconceivable that we go back, you know, back down to this very strong level of support that we have here from 120 to $1. You know, it all depends, like we said, on Bitcoin and the overall market. You know, those things are very important still in, you know, the overall cryptocurrency asset class. So you have to look at those things. Don't ignore them, guys. You'll get wrecked if you just, you know, the only thing worse than, you know, the two worst things you can be in crypto are, you know, a no coiner, a crypto bull, and a moon boy. Those are the two people that get wrecked. Everyone else can make a lot of money in crypto. So, you know, don't think everything is a bullish sign and everything means that, you know, it's going to the moon tomorrow, because that's not what it means. You have to look at these things, these other indicators and these other, you know, influences on the market. So next we're going to look at Avalanche. So Avalanche, you know, has done something interesting. It's just broken out on, this was on the 16th. It's almost unfortunate that the market is not, you know, looking stronger in the short term right now, because I have a feeling if, you know, if the market would have been hot right now as Avalanche was, you know, breaking out of this pattern here, I mean, it would have just taken off. It would have done something like Solana did, but the overall market in general is, you know, it's been hitting some speed bumps this last week or 2 weeks. And so, you know, Avalanche broke this pattern, and here we are. We've hit this area of demand here. And so now we're going to see, you know, if it can hold this range, if we can stay above this prior all-time high, because we came and tested it before, got rejected on the 25th of August. And, you know, after that rejection, we came down significantly too. I mean, we went from $61 all the way down to $31, right? In a short amount of time, a very short amount of time. We did that in, what, 11 days. And then from there, went all the way back up to a new all-time high of 75. Imagine, you know, it's pretty crazy actually, imagine how many people sold their positions that, you know, maybe bought in these regions and then they sold down here, and that's how it works a lot of the times. They get these guys on margin, trying to take a position here as it's about to break out, and they liquidate their positions. That's what you're seeing here. Massive margin positions being liquidated, and then boom, it goes off to the races to a new high. So yeah, that's what we're going to see, guys. Now we're here, and we're going to be looking to see if we can get back into this $66 range. And if the market starts to heat up a little bit, this could be a great entry point here. Or even, definitely if it gets down into these ranges, if we can see it, if we see it back down here to like a $40 zone, I think that's a great price for Avalanche. It's doing, a lot of really big things, and I think this is a great project. It's probably one of the, it's definitely not as well known as Cardano and Solana and things like that, I would say. So, I think this is one of the more undervalued projects, perhaps. So this is definitely one to look at. And, if you're short-term bearish, this might be a good price to pick it up at, just as it's coming back to bounce off, if you expect to bounce off of this demand zone right here. And definitely if it gets down to, the $50 to $40 range, definitely a buy range if you're short-term bearish or bullish, sorry. And then we'll go to Solana. So Solana is, it's one of my favorite projects, but in the short term, especially given the market conditions, I'm not so sure if Solana is going to be able to, challenge these all-time highs. Now, if the market heats up, guys, if you've been around for more than 6 months in crypto, what's going to happen if the market heats up. It's going to take off, because I think Solana is a great project. I couldn't believe back in, what was it, in June, whatever it was, yeah, here in July, when it came back all the way back down to $20, or got pretty close to it. That was Christmas come early this year. So, and we got it 3 times, but when it did it the 3rd time, I took a pretty huge position here, right around, $24 or whatever, because it was showing fairly decent strength throughout the entirety of the, general downtrend that the crypto market was in relation to a lot of the other altcoins. So, I kind of suspected that Solana was going to do some nice things if we made a turnaround. And, but with that said, I think right here, we're going to hit now that we've come back down below it into this zone here, into this demand zone, I think this area might act as pretty strong resistance, at least in the short term, because there's a fair amount of volume right there. You can see right here, there's quite a bit of volume traded in here. So, we'll see, but I think it could be difficult, like I said, in the short term for Solana to come, back above the 170 range. So a good buy point for Solana, you could, if you're into DCAing, I think maybe the 134 range. And, I don't like to be greedy and try and like pick it up at exactly these ranges. So, I'm more of a midterm to long-term investor. So, I would be looking right at around the 140 range. So right now where it's at, and, or you could be looking down to like 133, this area here. I do think we'll likely get a bounce up to, somewhere around, if we look here, I do think we'll likely get a bounce, off of this range up to here somewhere, maybe off the bottom of this zone. And this range is about 155. So I don't think whatsoever this would be a bad time to take a position, especially if you're looking for a more short-term play. You could be looking to, pick it up at 140 and then maybe take profit once you never want to be greedy. So once you get up to the 155 range. But with that said, that's only if you're doing, only if you're short-term trading. If you're holding, I think you could take a position at down at 130-ish, 135. And then again, if we come down to 117, and, there's another big demand zone down here, which, I mean, you guys know, it's not out of the question that it comes down to, if we go into a longer term downtrend, it's not out of the question that we come down here to $75. We see it all the time with the altcoins. I mean, they always come roaring back though. That's the key you have to keep in mind. You may have to wait, 12 months, but they come roaring back, especially the good projects. The projects that don't have many prospects for the future, that's not necessarily the case. But the good projects like Solana, Cardano, Ethereum, Avalanche, they come back. So, at the end of the day, 140, if the market turns around, this is a great point to buy it. But if we start trending down, I think you're going to see it head down to the $100 zone, 100 to 116. And it's not out of the question that we descend down here to this $65 to $75 zone up to, $80. So that's sort of the spectrum of possibilities for Solana. But, I do think at the end of the day, this is going to be one of the ones where, 3 or 4 years from now, no matter what price you buy it at here, it doesn't matter, because you're going to be, you're going to be looking at Ethereum type growth. I'm not saying it's ever going to be worth necessarily the same market cap that Ethereum is, but I think, it's definitely has potential to be a top 5 project. And then lastly, we'll quickly look at Link. And, this is illustrates great something I want to show you guys here. And so right now we're in this strong demand zone here at, 24 up to about 26. So, and you can see actually as I'm doing this, we're getting a bounce right off of this zone here. Whether that holds or not, we'll see. But if it doesn't, we're likely we have another strong zone down here, anywhere from 20 up to 23. But this is the key, guys. All the time on YouTube, you see these guys throw up a chart of, an hour or 4-hour chart and act like, the last 20 days are the only things influencing the price. But it's not the case, because if you look, we have a massive for CHAINLINK. There's just a massive zone here, which probably even goes, a little bit lower than I'm demonstrating it there. We have a massive zone probably to about right there that, that is going to act as, either support or resistance, whichever way you're coming from. And, we're now right around we're right at around the bottom of it. You can see maybe, I guess I'm just drawing this on the fly without, really taking a look here, but it's pretty much descends down to about $23. So we're nearing the bottom of it. So, if we fall below this level, it's going to become, an area of pretty significant resistance that we'll have to get through. We're forming sort of a descending wedge again here. And, so we'll have to see, what ends up happening with this. But it's, with all these things, this is the area where we're looking to move down to if, the market starts to turn negative on us, is, down to this $20 region. And, then after that, you start looking at, the $16 range, sort of the depths of the downturn that occurred in May. But, we'll see. But then just if you take a step back, guys, look, we're on a macro uptrend regardless. You can see it's just we come off of this trend, we hit this trend line, and then we just keep moving up. So, it's things like this that we're going to want to keep an eye on, in addition to the, the more micro trends that we're looking at here. We want to look at the big picture trends as well. And even when things, in crypto, it's real easy to, look every day, and because of the volatility, things seem, it's either depressing or, we're either in like a depressed mood or a manic mood. But realistically, if you just step back and look on the macro level, we're just $1.66 in last January of 2020. So just put it in perspective. Here we are, $1.55 in March. So it's all about the macro game. It may look bad in the short term, like, it sucks when it goes from 36 down to where we're at 25. But in the long term, things are great. And so it's just keep it in that perspective, guys. And, I think we could see some short-term turbulence right now. But, at the end of the day, like we said, we want to see, DXY not break above this level. We want to see Bitcoin hold this 20-week moving average, and we want to see the S&P bounce up off of this 60-day moving average. If we see those things, then then we're looking at this range here, and then we can start moving back up to $3, higher valuations. Then we can see AVALANCHE bounce off of this previous all-time high of $61. So that's where we're at now, guys, and I think that's about it for this video. So I appreciate you guys, and thank you. Have a good night. If you like this content, hit like and subscribe. And all right, you guys, take care.